just like treasury bill, call money, certificate of deposit, commercial paper. Yes, these all things what we have discussed in our previous part 4. Yes, in the part 3, part 4 what we have discussed. So, it deal with those things and it should not exceed a period of 1 year. 1 year kanna ekkuva undavundi. It is a period of short duration of less than 1 year or 1 year. The major players are means major participants of the money market. The major role players of the money market that are UTI, Unit Trust of India, GIC, LIC, commercial banks, etc. These are the participants. GIC, LIC, commercial banks and other financial institutions, UTI, IDBI, NABARD. These all are the participants of the money market. Yes, those are the participants of the money market. Whereas come to the capital market participants that are merchant bankers. Merchant bankers means in the olden days there are merchant bankers. Means they will act as a mediators between the person who purchases security and the person who is ready to sell the securities. Between these two persons they will act as a mediators. మధ్యవర్తుల్లాగా ఉంటారు. Those are the merchant bankers. Yes, the person who is ready to sell the security and the person who is ready to purchase the security, between them the merchant bankers will be participate as a brokers and they will receive some type of returns that is known as a commission. Okay, financial institutions are also participate in the capital market. Foreign and individual investors. Yes, NRIs. Yes, in the previous class we have discussed. So NRIs, non-resident of India, non-resident of India, even though they can also participate in the capital market. Yes, and the individuals means we can also participate in the capital market. We can also participate in the capital market. Next, it deals with T-bill, means they have the life period of long life period. Those assets have long life period. So for that purpose, in order to raise the fixed capital for business and government, they will approach to the capital market. Okay, in order to raise the fixed capital, business and the government will approach to the capital market. It is highly liquidity, means these market, these short-term funds which can be easily converted into liquid. What is the meaning of liquid? Liquid means not water or any mango juice or lemon juice. Liquid means cash. They can be easily converted into cash because of low risk. Actually, మీకు డౌట్ వస్తుంది, మీ టెక్స్ట్ బుక్ లో మెటీరియల్ లో మీకు 10 పాయింట్స్ ఉంటాయి, కానీ మేడం ఏంటిది 9 పాయింట్స్ ఎక్స్ప్లెయిన్ చేస్తుందంటే 2 పాయింట్స్ ఇక్కడే కలిపి రాసేసారు. ఎందుకంటే when there is a high liquidity means there is low risk. Liquidity అనేది ఎక్కువ ఉంది, chances you can easily convert it into cash, means there is low risk. Whereas come to capital market, low liquidity means you can't convert it into cash immediately. You can't convert these shares, bonds, debentures, government securities into cash within a year. So it takes a huge amount of time. It takes a long period of time. So it can't be converted into cash. It can't be converted into liquid. So and also, as they are not converting into liquid, so they have the high risk. So this is about the liquidity and the risk. Investors can't expect high returns. Here the investors can't expect high returns. One thing you have to keep in your mind, when there is more risk, then only there will be returns will be more. Otherwise there will be no returns, nothing. Okay, risk ఎంత ఉంటే రిటర్న్స్ అంత ఉంటాయి. మీరు ఎంత హార్డ్ వర్క్ చేస్తే మీ రిజల్ట్ అనేది అంతగా వస్తుంది. మీరు హార్డ్ వర్క్ కే మీ రిజల్ట్ చూపించేస్తుంది, మీరు ఎంత హార్డ్ వర్క్ చేస్తున్నారు, రైట్? సో ఇన్ ద సేమ్ వే ఇన్ ద బిజినెస్, ఇఫ్ దేర్ ఇస్ నో రిస్క్, the returns are also not attractive. Returns అనేవి attractive గా ఉండదు. Whereas come to here, there is high risk. Here there is a high risk. The investors get high returns. The investor gets high returns in the form of dividends. The investors get high returns in the form of dividends. Actually, not only in the form of dividend they are getting, the debenture holders, they will get the interest, right? So debenture holders will get the interest, shareholders will get the dividends. Okay, bonds, okay, those are also get by the government securities. So bonds, here we have about the information regarding the bonds. So we will discuss about the bonds and government securities in depth market instruments. Okay, so high risk, high returns, low risk, low returns. Those returns are not attractive and these returns are more attractive. Instruments of high value. The instruments means the face value. The face value is more. The face value is higher, but the face value of the security is low. ఎలా మేడం ఇది ఏంటిది అర్థం కాలేదంటే, instruments of high value, in the previous way I have explained you that they will issue at a discount. Money market లో discount కి issue చేస్తారు. For example, చూడండి 9,000 rupees కి ఒక ఇన్స్ట్రుమెంట్, వెదర్ ఇది టీవీ కానివ్వండి, కమర్షియల్ పేపర్ ఏదైనా కానివ్వండి, దాన్ని ఎందుకు ఇష్యూ చేస్తారు? 9,000 కి ఇష్యూ చేస్తారు. బట్ యాక్చువల్లీ వాట్ ఇట్స్ వాల్యూ? ఇట్స్ వాల్యూ ఈస్ 1 lakh rupees, means 10,000 will be the discount or interest. Okay, the 10,000 will be discount or interest which you will receive at the maturity date. Okay, so the instruments of high value, ఆ ఇన్స్ట్రుమెంట్ యొక్క ఫేస్ వాల్యూ అనేది యాక్చువల్ గా ఇది, కానీ వాళ్ళు ఇష్యూ చేసేటప్పుడు 9,000 కి ఇష్యూ చేస్తారు. at the date of maturity they will give 1 lakh rupees. So instruments of high value in the money market and the face value of the securities is low in the capital market. In the capital market, the face value of the securities is very low comparing to the money market. And later issue of primary market securities, the issue of secondary market securities, purchase and sale of secondary market securities, that is totally in the hands of SEBI. SEBI stands for Security Exchange Board of India. Security Exchange Board of India. So the SEBI regulates the market. This is about the differences between the money market and capital market. Once again we will recall the topic. See, money market, simply we can say that money market is a market for short-term funds. It is required to meet the working capital. It can be easily liquidated, low risk, and returns are also not attractive. It is controlled by RBI, and the transactions of the money market can be done through mobile phones or through the internet, etc. And also the instrument, the face value is also higher. And also what is the next anything instruments? These are the instruments. And who are the major players means UTI, LIC, GIC, commercial banks, okay, NABARD, okay. These all are the participants. Whereas come to capital market, it is a market for long-term funds. SEBI will play the important role. High risk, no liquidation, attractive returns, and the face value is very low. And these are the instrument shares, bonds, debentures, government securities. Players, who are the players means merchant bankers, financial institutions, foreign and individual investors. Yes, this is about the capital market. It is very simple. This is most important question. You have to read, because these financial market questions, we can't say these questions will be come in exam and these questions will be not. This chapter is totally important chapter. Okay, I tell you later which question may be asked for 10 marks and which question will be asked for 5 marks and 2 marks. But you have to study each and every topic. I am explaining you all the topics in detail, so sufficient working capital